Hey, what's up, everybody? Your house, buying a house, it's not going to save you any taxes, okay? It's true. There are expenses related to your house that are deductible: home mortgage interest and property taxes. Those are the two deductible expenses. And so, there might be a realtor out there saying, hey, you're going to get a tax benefit, right? Better to buy the house. Oh, don't worry about that because of this. Or you just read and you just know kind of common sense is it's better to own than to rent, right? Now, that's true. I think it's better to own than to rent, but not for tax purposes. So I always get this, and it's a great question. The question's not a problem. It's fantastic. Hey, I'm buying a house this year. I'd love for my clients to reach out to me. Tell me, I'm buying a house this year. How can it help me out? Or is there anything I need to know to prepare for my taxes? And I always tell them, look, you're going to get a home mortgage interest statement if you've got a loan, which most people do. You're going to pay property taxes. Those two things are deductible with an asterisk, okay? Insurance, repairs on the house. I mean, if there's no kind of business use of the house, it's not a rental or anything like that. These are just personal expenses like buying groceries. You're not going to get any tax benefit. Back to the home mortgage and property taxes. Yes, those are tax deductible. Only if you itemize your deductions, okay? What does that mean? Well, the tax code gives you a standard deduction. Everyone gets it across the board, no matter what. Your income is $50,000 and you're married, filing joint. I'm going to round for the sake of this video. Your standard deduction is $25,000. All right, you make $50,000. You're a single individual who's not married. Your standard deduction, $12,500. It's half of the married filing joint. Those are rounded numbers, but anyway, standard deduction. Everyone gets it. It's just money you get to subtract from your income before you reach your taxable income. Basically just, okay, this portion of your income's tax-free. All right. That's standard deduction. Let's take the married filing joint couple. Standard deduction, $25,000. Home mortgage interest, property taxes on your house, charitable giving, medical expenses out of pocket that aren't reimbursed, that exceed a certain threshold are deductible. Non-cash gifts to Goodwill, again, charitable giving there. Vehicle taxes. These are all itemized deductions. You only itemize these personal expenses. These are personal. These aren't business. If you've got business expenses from a self-employed business, you're going to deduct those all day long, whether you take the itemized or standard deduction. The itemized versus standard is on the personal side, okay? So these personal expenses of home mortgage interest, property taxes, etc., if they add up to more than the standard deduction, then it is beneficial for you to itemize. So standard or itemized, all right? Only if the itemized add up to more than the standard do you do that, because then it's beneficial. Otherwise, if your itemized deductions, home mortgage interest, property taxes, only add up to $10,000 and the standard deduction is $25,000, take the standard. Now, why I say that it's not going to help you, okay, that's not true across the board. There are some people who are going to get a benefit, but they increased the standard deduction. They doubled it. It's now $25,000, whereas it used to be around $12,000. So because they made the standard deduction so much higher, very few, 5 to 10% of taxpayers is the estimate right now, are hitting a point where those add up to more than the standard deduction. So that's where I say, buy the house. It's great. It's better than renting and giving someone else the money, right? You're building equity. Hopefully the home appreciates. You're paying down the debt. And home ownership actually is one of the #1 wealth building ways that people have built wealth historically in our country. Now you've got the crashes and everything, so no guarantee, like any investment. But I think it's better to own a home than to rent. So absolutely go buy your home. Unfortunately, the large majority of you won't get any kind of tax benefit from that, but you might. So better to have a tax professional to help you understand these things. My name is Brad. I'm with Wooten CPA. My goal is to bring peace to your finance and tax responsibilities. Please subscribe to the channel, hit the bell so you're notified when new videos come out. Thank you for watching.